ACME Solar, that's the stock on our radar on the back of their recent order win coming in from the NHPC tender. To discuss that and more other parts of their business in detail, Nikhil Dhingra, who is the CEO of the company, joins us now. Thanks a lot, Nikhil, for joining in. Just, on this NHPC order win, if you could explain to us the details. What is the capex? What is the debt equity? You get 30% via VGF, we understand that. How does the EBITDA accrual work for you? At what rate have you been given this tender?
Right. So this is the first of its kind win for us, wherein we have received this particular bid is coming from Andhra Pradesh, and it's a very unique bid because this is coming directly from the customer and not done by the SECI on its own or NHPC on its own. So it has a direct customer. So the PPA will be resulting in a very early timeline. And the other thing is there is no land acquisition time requirement or a transmission line requirement because this will be housed in the premises of the customer. So in a way, it's a very much less time consuming and much less risky in terms of execution because it does not include a land and transmission line. So in terms of the revenues, it will result in a revenue of around 60-70 crores and a capex of around net of VGF around 500 odd crores. So in terms of ROC, like we mentioned to you, we target a ROC of around 14-15%. So that is the threshold this project will also meet. The good thing is it will be done in a quick timeline of 18 months and it will have a quick PPA because it is coming from the customer and it has a much reduced risk in terms of the execution. It's more like a transmission project than a renewable project.
And at what rate are you likely to, supply this? At what contracted rate? Because your current portfolio is 3.5. You said that the incremental contracts will come at between 3.9 to 4.
So this is actually the metric here is it's a lease kind of a project rather than a tariff kind of a project. So it's a lease rental of let's say 210,000 in one project and 222,000 per megawatt in another project. So you can normalize it through, it will not be equal to that tariff in terms of 3.5 or 3.9, but in terms of the ROC, it is in the similar range. So whatever capital we are employing, it will be resulting in that much ROC. And tariff, you can also say in a similar range for a similar sort of capex.
What is the range, the ROC range?
14 to 15%.
So that means on 60 to 70 crores of capital, you will be making roughly 8 to 10 crores in terms of an ROC.
Like I said, on a 500, we will be making around 70 crores. Yeah.
All right.
So this 500 crore is annual and you would accrue this over how many years? 70.
So this is one time, 500 crore is one time and 70 is annual.
Annual. And that would be over how many years?
This is a project of 15 years.
Okay, 15 years. Can you give us some more updates on the kind of order wins or PPAs that you've signed in Q1 and what are the numbers looking like in terms of overall capacity as you would potentially exit FY26?
Yes. So we have a very good quarter one in terms of the PPA. In the last 15 days, we have signed PPAs of 600 megawatts. And of course, one of these PPAs, the project has also commissioned because it was a very unique methodology we followed. We built the plant as a merchant plant, but immediately post-commissioning, we transferred that to the PPA because that PPA required us to offer an operational plant. So it has given us very good realization. So immediate boost to our revenues, and of course, it has resulted in a successful strategy from, let's say, building the plant as a merchant with an existing connectivity and then migrating it to a PPA because that's our core business. In terms of the overall capacity, we are at 2890 megawatt operational right now and 4 gigawatts of bid wins. Out of that 4 gigawatt, we have 2.2 gigawatts of signed PPA now with this 600 megawatt we have signed in the last 15 days. And we have 1.8 gigawatt, which is to be signed PPAs as of now, out of which we are expecting these 600, 700 megawatt to be signed shortly. And of course, the rest of them to be signed in, let's say, a quarter or two.
Okay, got it. Hi, Nikhil. Good morning. Good to see you. When the other big concern for the industry, various industries has been the rare earth availability. Is that an issue for your business?
Not yet. It is not an issue. See, we are using a lot of capex equipment. Most of it is Indian, but some of it is international. But like we are procuring lithium-ion batteries on a large scale, we have already closed some of the orders for that. So we have already closed purchase orders for most of the key equipments, and we are trying to do merchant battery also, right? Which is in a similar way we did the merchant solar I was just explaining. So our target is that we try and do it as early as possible, because the capex is there are a lot of tailwinds on the capex side in terms of the prices of these commodities. So we are not facing any headwinds on that side as yet, because some of these products, I understand that it is more on the components which require you to manufacture these products, not on the finished goods. So these hindrances are coming on more that, let's say, a motor or some such intermediary which is required to come up with a finished good, not on the finished good itself. So we are buying more of finished goods like the battery itself and not the intermediate goods.
All right, Nikhil, you all run the business. We here from the studios, we analyze various brokerage notes and we read up in the morning. And one notable note came in from Motilal Oswal earlier today. They have gone ahead and they have upgraded your stock, and they're highlighting that from the time you listed, your capacity has moved from around 1.3 gigawatt to around 2.9 gigawatt. And they're complimenting you all on that, because another peer that listed at a similar time didn't go at the same pace. So that's good on you. But a couple of queries here. As you're headed now from this 2.9 to 6.9 gigawatt, they are talking about FY29 being a big year for you. And at peak, they're saying you could do close to around 8,100 crores of EBITDA. Is that possible, going by what all is on the board right now? Things could change, but visibility could be in that direction, 8,100 crores?
It could be. See, our business is not very unpredictable, because we actually are forced to plan in advance, because this is a very capex intensive business. So whatever we win, whatever we clock on the revenue and EBITDA is predicated by what projects we win, what sort of tariffs we win. So the only variable thing for us is the project capex and the project timelines, like with all infrastructure project. The good thing is, in our case, it has been quite predictable, because there have been tailwinds in the capex, and of course, we do most of our execution in-house because of our in-house EPC. So in terms of the revenue and EBITDA, it is totally dependent on what projects we have. And at this point of time, like you noted, we have around 7 gigawatts of overall capacity. And bulk of that capacity involves a combination of solar, wind and battery. And that is why
So Nikhil, in short point, you're saying is at peak 8,100 crores is gettable, right?
So in terms of it is definitely gettable. And of course, as you move further into future, like you are moving into FY29, it is definitely gettable.
Yeah, this is what you had said to us earlier as well, that by FY30, you will look at 7,000 crores and significantly higher than that. Now, brokerages have done their back of the envelope calculations, come back with a number, and you believe that number itself is gettable. But, that's about the EBITDA. Let's talk about the EPS and your balance sheet, because you currently have over 10,000 crore of debt on your books. I understand that a large part of that is on floating rates. So what would be your debt repayment plan? That's point number one. And secondly, how much would interest rates savings be as rates come down?
So it's a very big plus for us in the last 3 odd months. The interest rates are a big plus for us this year. We have been able to refinance at a very attractive rates of around 8.5% and lower for our operational plants. The rating in terms of the debt load up, it's a 20-year debt for us, and all the debt is linked to a particular project. There is no debt at the holding company. All the debt is on the projects. And our net debt is 7,500 crores, and our EBITDA run rate for this year is likely to be around 2,000 crores. So the debt is broken into 2 parts. One is for the operational assets, and another is for under construction assets. On an under construction assets, you don't have to, there is a moratorium of 6 to 12 months post operation of the project. You don't have to repay that debt till that time. And of course, you have to, then you get around 18 to 20 years post operations to repay that debt. So that's how you repay that. So even in terms of a debt to EBITDA of 4 to 5, right now we are closer to 4 than 5. It is very comfortable because you have to repay it in 20 years. And in terms of the overall maths, typically often EBITDA around 45 to 50% is your interest. And as we go in the interest rate cycle, we are yet to get benefit of the base rates coming down from all the lenders. Most of our lending around, you can say, 60-70% is floating rate, and 30% as of now is fixed for us in terms of the overall. In this quarter, we did a fixed rate financing from Bank of America and Standard Chartered. So between fixed and floating, there is always a matter of interest rates and what's the key.
Yeah. All right, Nikhil, very quickly, we got that, sorry to come in there, but we've got the broad point, 70 to 80% is floating, 70% approximately is floating. Very quickly, at peak levels, what will your absolute debt look like? Because you've got a big capacity expansion that's coming on stream. And net debt to EBITDA, it'll hover around the 6.5 times. What is it?
Net debt to EBITDA will not cross 5.1 times.
5.1 times. Okay, and peak debt will be what?
Peak debt will be, let's say, when you say 7,000 crore EBITDA, it will not cross 35,000 crores.
All right, take that point. Thank you so much for joining in and giving us your view on the business. The street likes what you're saying. We've seen a smidge higher on the stock price as you joined in and gave us the outlook, the breakdown of the current deal that you've done with NHPC and your future capex plans as well. With that, we'll simply do a short break, but